FVG fair value gap trading strategy. How can you as a trader use the fair value gap trading strategy? What is the fair value gap trading strategy all about? Have you heard something like that, like FVG fair value gap? Have you been wondering what is fair value gap FVG all about? Don't worry, in this tutorial guide on FVG fair value gap, I am going to show you how to spot fair value gap, how to use fair value gap, how to combine it with other trading concepts to build more powerful trading strategy trading in the financial market. Before we get started on the fair value gap FVG trading strategy, ensure you are a subscriber. Like, share, and put a comment down. If you are in Nigeria, if you understand the Yoruba language, you can check the description of this video to access the link of the fair value gap FVG version in the Yoruba language. Right? Thank you. Before we get deeper into the fair value gap, I want you to know this is the full tutorial guide on FVG fair value gap trading strategy concept. So I divided this video into several parts, so I want you to take your time, exercise patience, watch this FVG fair value gap tutorial video from the beginning to the end. Right now, let's get this started. Fair value gap, I will explain it in its simplest term. Now, as you can see on the left hand side, I have 3 consecutive bullish candlesticks, and on the right hand side I have 3 consecutive bearish candlesticks. Now let's test the knowledge of your understanding on the Japanese candlestick trading technique. On the left hand side, what can you call the candlestick pattern forming on the left hand side? Likewise, on the right hand side, what is the candlestick pattern name we have on the right hand side? I will give you 5 seconds to make your decision and type it down in the comment box. Okay, now 1, 2, 3, 4, and the 5. Good. Now the candlestick on the left hand side, you can refer to that as the 3 white soldiers, while the candlestick on the right hand side can be referred to as the 3 black crows. That is the Japanese candlestick art of trading techniques we have been taught in the foundation of your candlestick reading class. Right now, if your answer candlestick, white soldiers, black crows, you're actually right. But in the advanced trading concept, XMC, smart money concept, ideology, these candlesticks represent a lot of valuable information. Yes. Now let's dive deeper into these candlesticks on this board. Let's start with the one on the left hand side. Now we all know the anatomy, the psychology behind the candlestick patterns, how it opens, the wicks, the upper wicks, the lower wicks, the open and the close, and the body. By now, if you do not know the psychology, the anatomy behind the formation of the Japanese candlestick patterns, please, I strongly advise you to navigate, check the description of this video to start your journey in the beginning of the art of reading the Japanese candlestick, because you cannot escape the foundation. If you're unable to read to understand what are wicks, close, opening, body, then you find it difficult to understand what this FVG fair value gap trading strategy concept is all about. Okay, good. Check the links in the description of this video. I have the link directing to the beginning of reading candlestick for beginners in trading. Now, as you can see, the first candlestick right here opens at a lower level, goes up and closes at the higher level. We have a lower wick and the upper wick. Well, this lower wick and upper wick are small in size. Now the second candlestick opens at the close of the first candlestick and goes up, close higher. We also have small lower wick at the bottom and small upper wick at the top. Yes. Now study the third candlestick pattern. the third candlestick patterns opens at a lower level and closes at a higher level with small lower wick and small upper wick. Now, this is what the beginners refer to as the three white soldier, but this candlestick means a lot. It's more than just ordinary white soldier candlesticks. Now, let's study the second candlestick. Now, for us to know if a candlestick which forms like this, it's a variation or if it belongs to the fair value gap, we need to ensure that the first and the third candlestick wicks does not push into the body or fully pushed into the body of the second candlestick, which means, now pay attention to the upper wick of the first candlestick. You can see where it stopped. Likewise, pay attention to the lower wick of the third candlestick. You can see where it stopped. Now, for us to derive or to find out our fair value gap, we have to mark the high of the upper wick of the first bullish candlestick in this pattern. We mark it with a horizontal line. You can use your rectangular tool. Once you mark that level, then you mark the lower wick of the third candlestick. That is the extreme low. You mark the extreme high of the first bullish candlestick, right? Once you mark the highs of the first candlestick and the low of the third candlestick, now the spaces between this high of the first candlestick and the low of the third candlestick is where we call the fair value gap. Now it means the upper shadow of the first candlestick and the lower shadow of the third candlestick must not thoroughly pushed into the body of the second candlestick. So if you can see an empty space within them, then that is a fair value gap, and the wider the space, the more reliable the fair value gap. So simple, isn't it? Simple. Now let's check the pattern on the right hand side. Now in this case, we just reverse the explanation on the bullish fair value gap. Right now, on the bearish fair value gap right here, study the first bearish candlestick. You know, sellers open the price from the top and push it down below. Right now, you can see the lower shadow of the first candlestick where it stopped. Now, study the second candlestick. Study the third final bearish candlestick. You can see the upper shadow of the third bearish candlestick. You can see the upper shadow of the third bearish candlestick does not push fully into the body of the second candlestick. Likewise, the lower shadow of the first candlestick does not push fully into the body of the candlestick. The body of the second candlestick. Now, mark the lower wick of the first candlestick with a horizontal line or a rectangular tool. Now, proceed further to mark the upper wick of the final bearish candlestick, which is the third bearish candlestick. Now, the space between the upper wick of the third candlestick and the lower wick of the first candlestick, which does not push fully into the second candlestick, this space is what we call the fair value gap. So what does this fair value gap mean? What is the significance of marking these highs and lows? Now, remember, we always advise you as a beginner that when you are buying, don't buy high. Likewise, when you are selling, don't sell too low. Now, the concept or the psychology behind this bullish fair value gap on the left hand side is, take for instance, price has been moving up aggressively 3 consecutive bullish candlesticks. Now, you don't want to jump in at the extreme of the third candlestick or at the close of the third candlestick. Now, a better zone for you to look out for trade opportunities if price can retrace into the 50% or the discount price level. So the discount price level of the average price level will usually be at the middle point of this third candlestick, which is the body or the second candlestick. Now, if there's an empty space, there's a higher chances price will push into this level. And when price push into this level, you combine other technical factors, which we will discuss in other parts of this tutorial. Now, this case for the bearish candlestick. The bearish candlestick, you don't want to sell too low at the third close of the bearish candlestick. Instead, you prefer price to push up so that you can sell it high have more profit, reduce your risk. Now, the fair value gap doesn't only give you trade opportunity at a better price level, but it also helps you to reduce your risk and increase your profit ratio. Now, if the price should push back to these empty zones on this bearish fair value gap, you tend to sell high, reduce your risk. So this is the concept of the fair value gap. So the second candlestick of the pattern or the 3 consecutive formation, if there's an empty space whereby there's no overlapping of wicks, then you have your fair value gap. Now, this is not all about fair value gap. I have series of parts in which we are going to discuss more on fair value gap, how to identify strong fair value gap, weak fair value gap, where to spot them, how to combine other technical factors, and how to manage your risk on them. So if you would like to watch more to proceed further on fair value gap, to master from A to Z of fair value gap trading strategy, this is what you need to do. Subscribe to this YouTube channel, like, share, put a comment down, right? And check the links in the description of this video to proceed to the second part. By the time of watching this video, if the second part is not yet out, make sure you subscribe so that whenever I post the second part, you will be updated through the notification bar. So tap on the notification bell, right? For those who are just starting or you have difficulty to trade on a reliable, transparent, legitimate, trustworthy broker, forex broker, crypto, stocks, commodity, or index broker, check the links I left in the description of this video. I have reliable, trusted brokers which I've been using for years. These are brokers you can easily fund and make withdrawal. Unlike some other fraudulent broker, you can only fund, you can withdraw your profit. So if you don't want to be a victim of fraudulent broker, use the link in the description of this video. Also, you have some bonus offer. If you use the link, you have opportunity to have 100% welcoming bonus or 50% welcoming bonus. You can use this bonus to trade and make profit. When you make the profit, you withdraw your profit, but you cannot withdraw the bonus. So the bonus will increase your margin or help you to take a bigger lot size position, right? So I will see you in the next one, right? Stay blessed, manage your risk.